There are a number of things behind that, which I think speak to part of the regulatory infrastructure in the United States, and certainly digital assets are a global phenomenon, and they're not relegated to the U.S. only. But in terms of regulation of digital asset markets, the U.S. has been very far behind, with Europe, the Middle East, and even Asia already leading in terms of how they regulate the trading of digital assets, how they treat digital assets, how they account for them on balance sheets. So the U.S. has lagged behind that materially, some of which was attributable to previous administrations not really understanding it. We don't want to make this a political discussion, but the current administration has really taken the reins off of the digital asset ecosystem here in the United States, and enabled it to start to grow again. And some of the things that they've done, rolling back SAB 121, which prevented banks from holding, touching, and really transacting digital assets. They've dropped most of the lawsuits against the dealers in the space, and they're moving forward, as we've seen with the Genius Act, and a number of other initiatives to make digital assets more feasible, palatable, and investable in the United States. And so this kind of um, how do I want to say it? Just kind of confluence of factors, which finally allows the investable community to really understand, hey, these are here to stay, and we should be taking a look at them. Another factor was the launch of the Bitcoin and Ethereum ETFs last year. Bitcoin back in January, Ethereum back in May. That has allowed regular investors who have brokerage accounts to participate in the price action of certain digital assets, which again sparks interest. So now we start to create demand. I don't understand Bitcoin, but I think I should have it in my portfolio. Great. You can buy an ETF wrapper and you can put some in, and you can understand now, and you can see a price action, and you actually are able to have access to price movements of digital assets without owning the underlying digital asset. So we had those two come online last year. We actually have a number of filings for other token ETFs, Solana and XRP, which are moving through the SEC registration process right now. So we have seen a groundswell of interest, both in the ability for investors to access the market, and from the government to not only take off the reins, but really kind of push forward on regulation. And if I'm thinking about the investable universe of assets in the world, this is one that's emerging and is becoming more investable. And then the third thing that I would focus on to some degree is really kind of very specific to kind of Bitcoin, Ethereum, and some of the other majors, is you've seen this cottage industry of what we call digital asset treasury companies that is popping up. The first one, which most people should have heard of by now, is MicroStrategy, with Michael Saylor having taken the company and really turned it into a Bitcoin treasury company. And the sole purpose of that company is to really buy Bitcoin and hold it on their balance sheet. And they issue debt securities, they issue equity securities, and they use the proceeds to buy Bitcoin. So if you think about MicroStrategy as a Bitcoin holding company, we are now seeing that expand. I think there are over 100 Bitcoin treasury companies at this point. And now that is moving into Ethereum, which is part of the reason why we've seen the price action of Ethereum has been very strong in the last couple of months, because we've seen the investor base in the traditional equity world is now accessing these types of treasury companies. And so we've seen Ethereum treasury companies, we've seen Solana treasury companies. And so these are basically similar to the ETF. These are ways for regular investors in their brokerage accounts to access price action in these underlying securities. However, these treasury companies are taking a slightly different approach from the ETFs. They are using equity and debt issuance to buy and hold these assets underneath. So we've seen a groundswell of demand from digital asset treasury companies that is definitely helping price action. So combination, if I were to sum it up, would be government regulation in the United States has paved the way for more people to get in. ETFs have paved the way for more people to get in. And then you have purchasing demand from some of the digital asset treasury companies.